Why is this going so poorly? Ultimately, this was a project that was brought to Florida with a lot of fanfare, but it seems like ridership is lagging, particularly enough to hit the firm financially or hit the project financially.
Well, you have to remember this is a startup project, a startup railroad, the first railroad, privately run railroad in the United States in 100 years or more. So it has a ramp-up period, and it has two basic routes. One is the Miami to West Palm route, and one is going from Miami all the way to Orlando. Now, the Miami to Orlando route just opened last year, so they're starting to gain ridership. But in order to reserve seats on that line, they've reduced seats on the shorter commuter line. So that's been one reason that ridership hasn't been up to expected. But even still, the projections for ridership are much higher than what they've seen, and it's just there's a car culture in Florida, and there's some issues around cost. So that's what we're seeing.
How are investors thinking about the debt and whether they want to buy it? I think it's interesting you had written about Barclays seeing value in the debt just before this downgrade, it looks like.
Well, there are different kinds of debt. There's 4 different classes of debt, and the debt that Barclays was talking about was the insured bonds. So their senior debt, part of it, it's about $1.1 billion is insured by Assured Guarantee. So they're backing those bonds, and those bonds have declined a little bit in price to around like 95, 94 cents. So they're seeing value in that because ultimately if Brightline misses principal and interest payments, Assured Guarantee will guarantee those. The uninsured bonds have declined further, the senior bonds to around, I think around 70 or 80 cents on the dollar. So that's a little bit more risky.